The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. Looking good, feeling good, Billy Ray. We'll see what happens with these markets today. We're going to be opening a lot lower, and every time they open lower, they rally. We'll see what they do today. I've posted the chart of the NASDAQ into the room, and as you can see, we are spot on. Gartley 786 hit the exact number at 44.63 last night. So if we go much below that, you know, we're going to be close to those, breaking those lows out of 44.32. Folks, I hate to announce this, but we're in a bear market in stocks. We have been for a long time, and with just a tiny bit of weakness today, and the Dow's down several hundred points. They have to hold it today, whoever they is, because if they don't, you're going to be breaking down through some really serious support, and this market is not prepared to handle a lot of selling. The reason for that is, if we've looked at that breadth indexed every day since that I bring it up, it just gets worse and worse. We're having more new lows again yesterday. The advanced decline line, of course, was going down even with that massive short covering rally. And if you'll remember, I told you a story, it must have been several months ago, about the market. And don't remember the exact year. I believe it was early 2000 when the market was on its way down. I was short, and the market was down like 200 points, and I saw the market rallied about 75 points, and it rallied about 100 points, and I got frustrated with it, so I went to the movies. I just said I had a big profit in it, so I was going to close out with a huge profit no matter what it did. So I went to see the movie. The movie that I saw was Pierce Brosnan in Volcano, and the market rallied to be up 150 on the day. And in the last 2 hours of trading, it went back and made a new low and then continued down for another 4 or 5 days. But it rallied something like 300 points in a matter of 2 hours. And that's pretty much what happened yesterday. It wasn't quite that dramatic, but it was pretty dramatic. It rallied several hundred points. And we're going to start seeing volatility like that. So, just be prepared when you see it, because it can really be quite dramatic. This is a key day today because we have some pretty good cycle stuff coming in from Norm Winsky. The problem is it could have been a cycle high yesterday given the fact that the market ran up so fast and then dropped again. But the overall structure of the market is still very, very bearish, and it doesn't appear that it has a whole lot of friends up in this area. So just be really careful today, folks. This market is just getting weaker and weaker and weaker. Japan, let's try it again. Japan was down a little bit, about 1.5%, but again, China was down better than 3% one more time. So we've got some situations here that are scary. And I'm not saying that lightly, because I don't get scared very often. I've only been scared twice in my commodity trading career. Once was in 1980 when I was short gold into a Iran-Iraq war, and they were calling gold to be extremely strong, and it was up like $2.35, and it opened limit down because the war was pretty much over. And the other one was on October the 19th of 1987, because I thought that we were really close to melting down in the financial markets. We could be closer than that now, given all the derivatives and everything that we have here, because of the fact that it's quite what do you call it? it's just quite tenuous because of the other counterparty risk. I mean, we've got all these derivatives out here, these ETFs that, these are new things. We haven't had these for a long time, and I don't know how they're going to handle a market that starts to sell off. If in fact, this one, would in fact sell off. We'll have to, wait and see. But the opening is going to be really interesting today because of the fact that we had these markets at these key spots. Now we've got another market that is spot on, getting ready to do something. And I'll start out going across the pond over here to Great Britain. Let's try that again. Oh boy, I'll tell you. Folks, you should look forward to old age because when it comes, it's going to sneak up on you. Hold on just a second here. Okay, and here we have I'm going to show you the German Bund because we've got if you like Gartley patterns, boys and girls, you got a couple of them today to look at. This is a really key one to look at. This is the German Bund. I'm going to post it in here for you. We're going to walk through this. When we're finished with that, we're going to take a look at where we think the turning point here might be in gold and silver. But we hit the spot on 61% retracement in the German Bund. That's the 30-year bond. We also hit the 61% retracement on the U.S. Treasury bond. That came in at 159.28. So both of those are completed, and this could be a spot where interest rates are probably going to start back up again, and that might make the U.S. dollar a little stronger. But I'm not sure of that. But I'm just telling you, this bond chart, if you can't sell German bonds here, you should not do pattern recognition because this is an absolute perfect chart. From June 8th to July 8th was equal to July 13th and August 20th, where we are today. So these are all squared out as far as ratios, price and time, ABCD. Everything is there to sell the German bond, or if you prefer, you could do the you could do the U.S. Treasury bond. And let's just pull it up here. And give me 1 second here to get it up here. There we go. And you'll see that we are doing the same thing. The 30-year bond is actually making a 786 retracement in the market, whereas I want to show you the notes too, and you'll see that we have a situation in the notes that is very similar to all this, but the notes again are weaker than the rest of the market. They're not even taking out the highs of the previous day as of yet. It's still relatively early, and if stocks hold up, or excuse me, if stocks drop a lot into the early this morning, then we're going to be looking at something that could tell us that we could go through here very quickly and make a flight to quality thing. So anything above 160 in the bonds would not be a good thing to look at here. So anyway, this is the Treasury notes. As you can see, we had a really strong rallies in March and April. We had the same thing from June through August. Both of those rallies were exactly equal to the exact tick. And the Treasury notes have not taken out those highs of last week as of yet. They are setting at the 786 of those highs, but the short-term paper is certainly, weaker. In other words, that the short-term rates are declining versus the long-term rates. Whether that's a sign of inflation or not, I'm not really sure, but that's something that we want to take a look at. All right, now let's go over to the gold market here because we've been a little bit friendly to this market for quite some time when nobody wanted it. If you remember, there were two reasons to take a look at gold from the long side. One, the main reason was the fact that the hedge funds were so darn bullish this stuff. And let's try it again. Oh, Billy Ray, not looking good, not feeling good. Hold on just a second here. All right, there's the chart of the up-to-date chart of gold. We've now rallied $80 an ounce. We were looking for somewhere between at least $100 an ounce, and we're $80 into that right now, and we're approaching the 61% retracement of the high that we had, back in June. That comes in at the 1152 level. We don't have much of an ABCD structure. There's a little tiny one here, but the only way you can see it is if you go to a 240-minute chart, which is a 4-hour chart, and I'll try to. In fact, I will do it. Just give me 1 second here. The problem is it didn't even back off to a 382 retracement. It only backed off, went from 1125 down to 1107, which was $18. The harmonic number in gold is 17. And we had Jimmy Twentyman on the show yesterday. He was the one that taught me about harmonic numbers, and the numbers are 18 and 36. And if you'll notice here, I'm going to put this ABCD in now, and you'll be able to see it. That will take us up to the around 1158 to 1160. Well, that's not very far away. We're already up half that today already. All we got to do is extend the gain to about $25, and then you'd be looking at something that will be a little bit more ominous. But we should be starting a place. We are up 10 days now off of the bottom, so we ought to be able to look for a retracement in gold. And remember, the harmonic number in gold is 17, so you multiply 17 times 2, which would give you 34. So look for a $34 correction in gold from any spot that might be a high, because that's the one you want to check at to try to be either a buyer or seller. Now, there's one market I have been flat out wrong in, and that was that oil market. I thought it was going to hold, and it didn't. So there's not much you can do in oil here, at least from a pattern recognition perspective. You just have to wait. That puppy just failed, so you can't do anything with it at all. We did have one that worked relatively well yesterday that we talked about here on the air, and that was the wheat. The wheat came right down to that 495 3/4 level, and held extremely well. And now it looks like we're going to be. Whoops! Let me get this. Show you where the objective would be here, because it held up just right yesterday. You got to get right once in a while, otherwise it's not any fun to do this. Okay, here's the wheat picture. Still in a downtrend. If we get up here, we're trading at 504 right now, which is about 8 cents higher than where we were looking to buy it. The next objective here would be around the 509, 510 level, and then anything above that, then you'd be looking at a stronger rally. But that's what it's looking like in wheat on a short-term basis. So these are some of the things we're going to take a look at. We're going to pay a few bills now for our Chairman O'Brien, and then we'll be right back to talk about silver.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and at the break, we're going to have Rich Anderson on of Anderson Capital Management, and we're going to go over some grains and commodity things that are happening, especially in crude oil and some of the other markets that he follows, but primarily wheat, corn, and beans. Okay, the next project here is to take a look at what we're looking at here in silver. 3 days ago, we had a pullback to the 61% retracement at $14.78 per ounce. The low was $14.74 per ounce. And right now we are getting ready to challenge the highs that we made last week up at the 1558 level. Boy, if we get above that, that market is probably going to jump to 1591 without any trouble at all, because the people that sold it short up in there, which I happen to be one of those, and fortunately for me, you know, it broke really hard the next day, and I made my profit objective, and then it got down to the area where we were looking at for a potential buy. I didn't get it bought. That was the problem. I got gold, but I didn't get the silver. But silver sets up a absolute beautiful ABCD structure, taking you up to just about $16 an ounce. We're only 50 cents an ounce away from that, so it could easily make that in a heartbeat here, given the fact that these markets are starting to pick up in volatility. This is where pattern recognition really is really the best thing from my perspective to look at, is because when you have volatility like this, these numbers, they hit the same numbers, but they hit them with such force and regularity. I mean, they'll go exactly to 1.618 or exactly to 0.61 or 0.786, or my favorite 1.618, because 1.618, if you hit that and it goes beyond it, oh boy, you got big troubles, because that means it's going to go to a place where we don't know where it's going to go. Well, we never know where it's going to go anyway, but you don't want to be in that place where you don't have any way to protect yourself. So anything beyond 1.618 is not a good place to be. So silver is setting up to make at least $16 an ounce, but remember, when the market comes off of point C, like we did 3 days ago at that 14.78 per ounce in silver, and it comes out of there with either a gap or long-ranging bars, which we've had yesterday, and we've got another one today, that tells you that it's most likely to expand. And the 61% retracement on this silver move, just from the high that we made back in May, and that's equivalent to the one we're looking at in the gold market, that comes in at 1641. And if you'll notice, I'll put this in here on this red box here, so you'll be able to see that we have two targets up there. So this is what I would be looking for in the silver market here. The fact that we have looking at 1635 would be the 1.618 expansion of the BC swing, and it would be exactly 61% retracement of the high that we made back in May. And that move would be equivalent to the move that we had between March and May. That market rallied about $3 an ounce, and this one would be from 14 to almost 16 FB, just a shade less than the market move during April and May. So that's where I think silver's going. Hopefully you get a chance to buy it back here if you haven't got in it, but silver harmonic number in silvers are 18 cents and 36 cents, but the way these markets are jumping around, they could easily double that to 72 cents. So 36 cents is the first one you want to look at. We had that yesterday when the market sold off 36 cents before proceeding higher one more time. Now, before we get Rich Anderson on the line, I wanted to show you the New York Stock Exchange Index. The opening is going to be very interesting today here because of the fact that we're at such critical levels here. But you'll notice here how the New York Stock Exchange Index looks extremely bearish. I mean, my goodness, this is a market that could easily, go down to an area that would scare a whole lot of people. But we'll put this up to let everybody take a look at it, and then we'll be on our break pretty soon and get Rich Anderson on the line. Okay, you'll see yesterday we had that big rally that took out the early morning highs, and then it closed in the lower end of the range. It's going to probably take out the lows today at the 1641 level. If we do that, folks, that's going to break out of the lows going all the way back to July the 4th, and that is not a good thing. Okay, we'll be back with Rich Anderson at the break, so stay tuned.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line of Anderson Capital Management. Rich, are you there?
Good morning, Larry. How you doing?
Pretty good, buddy. What do you think today? First, give us a recap of that crop report that we had last week that tore everybody a new earlobe, and I was just wondering what you were thinking about the overall picture of it, because corn rallied back quite a bit, and we're getting a little
20
bit of
cents off its low. Well, here's the deal. I mean, they came out with these numbers that are near as I can tell in fantasy land, and and certainly the market wasn't expecting it, and the market got washed out. And the way things work these days, especially large fund traders, once they get damaged, they're out for the month, and they'll come back 1st of September, because they want their standard deviation of returns to be minimal on a monthly basis, so that when they sit down with a large teacher's pension fund, they can ask them for $100 million, because we never lose more than 1% in a month. And the way they do that is once they get tagged, they just flatten everything until the next month. But to bring it more into this week, we got the Pro Farmer Tour, and I've had friends and clients on this tour, and they go the same route every year. Now, they've got the difference in Indiana, as an example, versus what the government has. They're talking 15 to 20 bushels an acre less than what Indiana has. And I have a client that's in Indiana, and he's been telling me all summer long about the problems. And they had soybeans in Indiana yielding better than soybeans in Minnesota, and frankly, Minnesota's been one of the better places in the country this year. The only state where they've surveyed and had a higher yield than the USDA's August 12th report was South Dakota. And South Dakota, that's where my farm is. And South Dakota's having a awfully good year this year, and there's going to be some incredible corn. Now, we've had some late rains that have helped the beans in multiple states, but the corn is what it is. The next information from the USDA will be on the 11th of September, and then on October 12th, I think that's when they'll start to rejigger and adjust for some of what I think were miscalculations in the report we saw this month. I mean, you saw yesterday somebody bought 12,000, they buy 370 puts, and they bought another 6,380 puts, and then they were buying those puts and buying these futures, going delta neutral. I mean, they're looking for a big snapback at some point. And the wheat, while it's not impacted by the crop reports, because it is what it is, we're pretty much getting through harvest other than up here, it's probably fighting them bid down here. It's only the beans that, as this rains have moved through, rains in August make increased yield in beans.
Well, the beans, they sold off a heck of a lot more than the corn and the wheat. Of course, wheat held up really well, but the beans really got hammered, and I guess that's all part of that fund relationship that you were discussing with us just a few minutes ago.
Right, and it's not. You could just see it across meats, coffee, which had 11% move a week or so ago. It got whacked back down. When they get out, they go flat everything, and then they come back in at the beginning of the month, and it's just a new dynamic in the capital flows. And some of these guys got whacked in the oils. The oil market, I don't know if you noticed, but it's having a little drop in price. We had that we had that increase in storage of 2.6 million barrels or whatever. Well, part of that has to, first of all, we only have a couple refineries in this country anymore, and one of them's in Whiting, Indiana, and they've got some leaks in some pipes, and so they're talking about a 30-day problem and trying to get this thing fixed. And of course, even out here in Minnesota, gas prices went up 30 to 50 cents, and I hear in Chicago closer to 90 cents to $1. Well, that's what caused this increased storage, but it's more than that. This is a structural thing. Remember when we used to have high-priced natural gas, and then we found all this natural gas in the Marcellus Shale and all these other places? Well, then we started fracking up in North Dakota and in Texas and every place and started producing oil. This is a structural change. Now, the Saudis figured that if they got oil below $60 a barrel, all the frackers would stop fracking. But what happened is, instead of 220 drills rigs out, and one of my driller buddies was in the office on Monday from North Dakota while they moved the rig. Instead of 220 rigs, let's say, out there, they've got 70-plus rigs. But all these rigs are the high-efficiency ones that are horizontal rigs, and you can put in 4 holes without moving the rig. And they bent the cost curve like you can't believe, so that their costs have come down to $35, $40 a barrel. There'll be some financing issues because it's reserve lending. The banks lend based on your reserves. So that those issues later in the year and the beginning of next year, because you normally meet with your bankers on an annual basis, are going to cause some problems for some companies. But somebody will, the big companies will pick them up, and they'll just be in better shape for it.
Wow. Well, I noticed the wheat, since we've been on the air, you've been bullish because they just hit the price objective of 510, which that's what I was looking for. So you can color me happy for the day. Rich, I have a question. One of our listeners has asked us, and that is about the relationship between the soybean meal and eggs, because the price of eggs have doubled in price in the supermarkets. That's one of the things where they can't cut a dozen eggs down to 10. So So
Right.
what it's basically because they feed them soybean meal, right? They can't feed
Right.
fish.
So the primary food for poultry, whether it be turkeys at Thanksgiving or eggs for breakfast, is corn and soybean meal. And as an example, a guy that you probably know, the president of the NBA, Glenn Taylor, the owner of the Timberwolves, and he lost 8.5 million chickens in Iowa. He isn't just a basketball owner; he's very huge in agriculture. But it's 9-week incubation and then you've got a new chicken, and 3 months later, they're ready for the fryer, or they start producing eggs. So the turnaround's much quicker than in cattle. When we liquidated the cattle herd, it took, it's a 2.5-year process versus a 6 months process. And so while there's been some slow down in egg production, they're starting to put the even down in Iowa where it first started, they're starting to one of my Iowa guys was in yesterday and telling me they're starting to put new chicks in, and they'll be laying before you know it.
Wow.
So that's a quick turnaround. So 3 to 6 months from now, that'll be gone. They'll be back to normal.
Yeah, I had Jim Twentyman on as my guest yesterday, and we were talking about the old trading house up in Pismo Beach that you visited several times, and both those were good old days.
Yes, they were with Bryce Gilmore and the boys.
Yeah, Mark Douglas and Robert St. John. Boy, we really had a lot of fun up there. But Rich said to say hi to you because I told him you were coming on today. There's one other question that someone asked, and that's about the live cattle. The cattle have been in this trading range that you predicted between 145 and 148. Do you see any change in that coming anytime soon?
Well, the last time I was on, I told you they're going to get down to 144, and I think at the time they were 47, 48, and they got down to like 42, 25, so I was a little high. And then they proceeded to go back up to 51. And it's... you buy cattle on Monday, you're right around 10:30 is my thinking. If you wanted to be specific, but I don't give recommendation. I just trade for myself. But there's some clearance that's going on. The pressure right now is on. They closed a plant in Denison, Iowa, but that was just a kill plant. But they expanded the plant in Tyson expanded their Sioux City plant to have more capacity than Denison, Iowa's closing plant. So it's not really a big deal, but the market's making it a big deal temporarily. And probably into Monday about midday is kind of what I'm figuring.
Okay, that makes sense. Listen, I want to thank you for being on with us today, and we'll have you on in a couple weeks. Okay, Rich?
All righty. Look for the 1st of September. They'll get back in.
All right. Thanks a lot, buddy.
Take care. Bye.
Okay. That was Rich Anderson of Anderson Capital Management. So we'll have him back on again. His time gets a little valuable, so we have to shorten it up sometime when he's really in a hurry. Now we have a really interesting situation now in the wheat because we have just completed that little pattern that we were looking at yesterday and today. So we should take a look at that because we've reached up into the exact number we were looking at, which was the 510 level. And remember, we were in a downtrend in this wheat over the last week or so. So if you're interested in shorting it, this would be the spot to take a look at it. Frankly, I was long from the 595 level. So basically, I'm flat and I'm not going to reverse myself right away. I want to give myself a few bars, and that's not the kind you drink in. I'm talking about the bars on the chart to tell us that this is a place where we're getting ready to have a pretty significant correction again. But like Rich mentioned, this corn has rallied 20 cents off its bottom, so it's taken back more than 50% of its loss of that big day. So there was some really strong demand down in there, and that tells us that you want to start looking for places to buy wheat and corn because they handled that very, very bearish report quite well. And as Rich mentioned, a lot of people are really suspect if the report was even correct or not. And believe me, some of these reports that the government brings out are wrong. And that's one of the things that you've got to keep in mind, that certainly could cause a big problem in. So that's what we're watching here in the wheat and the corn and the beans. Those are the ones that we're keeping an eye on very, very closely. So stocks are still down. The NASDAQ has held the 786 thus far, but not too much else is happening. Now, the New York Stock Exchange Index is just taking and just making it's 15 minutes for them to bring out its first trade. Let's just see, because we are opening below the July lows, which is that's a very negative sign, especially since we had a pretty strong cycle high coming in on Thursday last. So we want to see where we are. Just put it up here and we'll be able to see that we are. Let's just do it the easy way here. Hold on, we'll do it with an hourly chart. We can see it a whole lot better. Oh, we've gapped down below it. That's not a very good sign either, folks. That's might change from here, but this is not a good chart right now. Well, whether that'll change or not, remains to be seen. But that's a pretty bad sign in my opinion. And we'll wait and see what happens with this from that point of view, and we'll go from there. Okay, now we could easily, rally again, because we got the Dow down over 100 points, and just about every time it opens 100 points or 200 points lower, it gets a pretty good rally going, and we'll have to just to wait and see, what happens. The breadth of the market, folks, it just gets worse and worse, and that's what's the problem is, because when the selling does start to come in, there's not going to be many people buying, because we've got this record margin debt out here that no one even talks about anymore, and that's the thing that really is the canary in the coal mine, as they say, along with the fact that we've got China, which even in greater distress than what we are. So these are the things that we are kind of keeping an eye on this morning to see what happens. But it'll be an interesting day here, as it always is, and we'll go from there. Okay, we have a question about Apple. We've been bearish on Apple for quite some time here. The next question is, where are we going with Apple? Apple has actually held up pretty well compared to the rest of the market. We went down below the 786. We rallied up. Now we've gapped down, but we're still not even at the 61% retracement of the low we made a few days ago. And so that's the main thing that you want to keep in mind. We need to get Apple below that 109 level, and then that sets up the price objective. And this is the one that we mentioned before, and this is worth looking at, folks, because we want to watch. I look at ABCD structures because they're so they're far from perfect, but they do a pretty good job. But if you look at this chart that we're going to show here on Apple, when we had the low back on at the 113 level, we rallied up to 120. Well, 120 was exactly 382 of the high that we made back on July the 20th, when it was 133.34. That sets up an ABCD pattern down to 99. So that's another 20% from where we are right now. And the reason why you think it's validated is because after that 382 was hit, the market came down and made another new low, and then rallied up to a 786 retracement. And at the worst case scenario, you'd be looking at a 3 drive to a bottom pattern down at the 106 level, which is down another another 5%, somewhere in that ballpark is what you would be looking at. I'll put this one in so we can see it. Oh, that didn't draw out right. Hold on just a second. All right, we'll take a little break here, and we'll be right back to finish up with Apple. And
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we were finishing up with Apple, and that looks like we could make a 3-drive to a bottom pattern somewhere down around the 106, 105 level, but it looks like it's heading towards 99. That's what it looks like from our perspective. Now, I've just posted the chart of an hourly chart going back over the last 3 weeks on oil. I really thought it had a chance of holding the 41.60 level. We rallied from that up to 43, and we've now come down and made new lows, which there's just no reason to even take a look at this. We made a 1.618 expansion of the high to low over the last 4 or 5 days, but if you look at heating oil and gasoline, those look like something that you're throwing a baseball off the top of the Grand Canyon and you're hoping someone will catch it at the bottom. It's just really hard to pick a bottom here in heating oil and gasoline. It looked pretty good The gasoline looked pretty good at $1.63, but $1.51 a gallon. That's another 12 cents under that. There's something seriously wrong, and I missed this one. I really thought that the gold and I really thought that the oil had a chance to turn. So we'll just wait and see, what happens with this. So these are the things that we want to look at. The most important thing today is if this gap in the New York Stock Exchange holds, gapping down below the July lows, boys and girls, that is really, really bearish. I mean, it's bad enough having the statistics that we have, but it's a very, very bearish scenario on that. So watch that very, very closely. You don't want to get into a situation where you're trying to catch a falling knife and find some good bargains in here, because this market has been in distribution for well over a year now, and we are starting to roll over, and there could be that time in the history where everybody tries to get out and that door is not going to be big enough, and we are going to start to see volatility increase all across the board. I believe in everything, so keep that in mind also. So these are the things that we want to watch. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.